Hi guys, welcome back. As we see, the market was doing a correction these days. So today I will talk about my plan regarding to the correction, and then I will tell you about this new stock that I bought today, and I will explain why I bought it. And before I begin, let's take a look at our stock picks. First, our baby NEO. It's been doing what I said these few days. It broke the support of 59 and then found a stronger support at 55 and bounced back. So some of you had grabbed a nice dip today. Lock-in is like I said yesterday, 13, it's a big step. So it would have some resistance to pass at first, and now it's back testing to gain some more momentum. Lu had a nice dip today also, so it would be another chance to add more shares. And also Baidu had a nice dip today. And if you look at the monthly chart, you will see that it's at the exact point of a big resistance for a long time. And if it passed this resistance, it would get back on a very long uptrend. So now around 230 to 240 would be another buying opportunity. But for EH, I think it's still a bit early to buy the dip. It might take a bit more time to consolidate. At least right now, it's too early to judge. It has a support of 68 and 53, but you can always build your position slowly by dollar cost average. That's how I built my position anyways. So I first bought 50 shares at $24 and then another 50 shares at $22. And then when it dipped to 20 to 21, I bought the rest of 900 shares. So my cost base is around 21. So today I bought JKS, Jinko Solar, which I did the analysis last night. I said I would look for the entry point. So I took advantage of today's dip and bought it at 65 something. And I shared to the Discord as well. But if it continues to drop, my next buy-in price would be 60 to 63. So the market was doing a correction these days. And I see some people getting worried. I do think the market has been in a euphoria for a while now. So it's very necessary to have healthy correction. But I don't worry so much, because if you have watched my videos 2 weeks ago or 3 weeks ago, you know that I have been preparing for correction. I don't mean by selling everything. I have restructured my portfolio to have more crash resistance. I took profit from the stock that I had a lot of gain in the past and put it in the undervalued stocks. For example, I have been treating Huami, which is HMI, like cash, because I think it's safer than cash. Plus, it has potential to grow. I mean, just look at last February and March, where so many stocks dropped 50 to 80%, and even the blue chips dropped 30%. But Huami had only dropped 2% and then 5%. That's it. It doesn't have much room to drop because it's already so much on the floor. That's why I think it's quite safe, because it's so undervalued. I sold a lot of the stocks and then I put the money into EH, YSG, HMI, and Lu. All these stocks had no hype and still at the bottom and totally under the shadow, and still have a lot of upside to go. So after I restructure my portfolio, I'm not so worried about the correction anymore. So I don't really need to reduce my long-term holdings like NEO, EH, Luckin, BNGO, and YSG, etc. My cost base is kind of in a comfort zone, so I don't need to mind the short-term price action. As for this correction coming, I would treat it as more of an alarm to reevaluate the short-term investment, because I think it might lead to a rotation of sectors. Right now, the quantitative easing has not stopped yet, so we are still expecting more capital flowing in the stock market. So that's why I'm still positive on the stock market. But it really doesn't mean our stocks are going to keep flying higher, because it's the institutions that decide where the money would go to, which sectors they go to. They are very good at rotating sectors. And I do think the EV sectors, the new energy, the biotech, and the penny stocks have been really hyped up recently not to mention the WSB. So I will try to be more careful from those. And I mean the new ones that comes out of nowhere with the concept related to these sectors. As more and more people had make some quick money with these hot sectors, everyone seemed to become more sure about it. And I think whenever everyone is sure about one thing, it's very easy for institutions to create backholders. It's very easy for them to pump and dump. It's very easy for retail investors to make big mistakes because people might believe many things in the same sectors would keep on rising, just like anything is the next BNGO, and especially after they have made some profit, they might put more money back in it and end up getting burned. Lately, we are seeing more and more chasing to the new specs that are already gone up so much, the EV specs and a lot of new energy penny stocks, biotech penny stocks, and the institutions basically just need to create a nice concept and a lot of retail investors would follow. So when this comes, I usually would try to be more careful. For example, I bought in this company, AQMS. It's a battery recycle company. So EV related penny stock. I bought in at $3 and it got double in less than 1 month. So I'm very happy to take profit and have the cash to buy something on the dip. So that's why if I were the institutions, I would rotate the sectors and relocate the capital somewhere else that has been cooled off right now. Like, for example, Airlines, Cruise, or MJ. So today I want to talk to you about airlines. Last year, I bought a lot of airline and cruise stocks in March and sold everything in December already because I felt there was so much optimism built up by the vaccine news. But now, I think maybe it's time to enter again and wait for another pop. I think even though we're still in the pandemic, it will go away eventually. Life would get back to normal one day, and so many people have accumulated so much travel needs and family and friends visiting, business trips, and such strong urge of vacation. So it's expected to have explosive recovery after the whole pandemic goes away. Last year, I bought mostly big airlines like Boeing, United Airlines, and Delta Airlines, for example, because I worry that some of the small ones may not survive. But right now, the situation is going to get better, so I think we can give it a try. So I want to tell you about Mesa Airline, ticker symbol MESA. It's the only airline that can still make profit out of all the airlines in 2020. The success is mainly from the unique business model because it operates under the big airline for their regional flights. So they are paid by the long-term contracts with the big companies, and the lack of travel demand last year won't really matter to them. So they are really the most financially healthy. Big airlines have gone through a lot financially. They have a lot of debt to pay back, and their operational cost has increased a lot during the COVID. So I think there is a possibility they might increase the price of their air tickets too. Then maybe this would create some opportunity for a low-cost airline like Mesa, who can save a lot of cost with smaller team, lower operational cost, and they don't need to have big cash burning in all the marketing expense because they mainly get their business by the big airlines. So they can really offer more affordable prices to be more competitive. So that is the reason why it's the only airline that could make profit in the whole pandemic, while all the other big airlines were fighting for survival and living on the stimulus package. Also, I think once the travel gets more demand, it would be the domestic travel that's likely going to rebound first for two reasons. One is that the government would be encouraging people to travel within their own country. It's the same thing in China it would be more safe. It helps to prevent the virus to spread and at the same time boost the economy from the domestic demand. And number two, I think people need to get back to traveling by making short trips first to get more comfortable before making long trips again. So more domestic flights would benefit Mesa as they offer regional flights. And last, it's by far the most undervalued airline company, as the market cap, it's only half of their book asset. So by the book asset, their stock price should value at $12 right now. So I think what it needs the most is publicity. It needs more exposure because most people don't know about this, but this is a job for the institutions. I think once they have bought enough shares, there might be some publicity there coming up, maybe. Overall, I think this is an undervalued company that might have spotlight to shine on maybe later, once the sector has been rotated to airline. I like to get in a stock before they run up, so I can sit back and relax, but before the rise, I usually would have a lot of patience. So this is a medium long-term holding for me, and my price target is $8 to $10 in the short term, and maybe in the long term, $15. So today I have started my position at the cost of 6.5, and I also shared that to the Discord already. If it continued dropping, I would add another time. So I think it's not a bad idea to have exposure in the airline sector right now, just for the later sector rotation. And it does appear to me that the institutions have been buying recently. That's why all the pandemic bad news did not affect the price to keep going down. And if you don't want to invest in such a small company, you can always try Boeing because it's the leader of airline and part of Dow Jones. So if they need to pull up the index, the Boeing must rise too. So that would be a safer choice for the airline exposure. And if you have enjoyed the content today, please give me a big like, leave me a great comment, and I will give you a big heart. Thank you. That's it, guys. Hope you can find my video helpful. Make sure you subscribe to my channel and give me a big like. Thank you.